Greetings from the New York Stock Exchange. I'm Olivia Bono-Voznenko, and I'm here with Stephen Guilfoyle because he's going to tell us what's going on today. Stephen, what's going on with you?
Oh, boy. Not much. What's going on with you, Olivia?
A lot. Thanks for asking. We do have a lot to talk about, even though there's not much chaos going on right now. Stephen, we like to bring some light into finance, but that jobs number last week, not so funny.
No, it wasn't so funny. And it wasn't just the non-farm payroll number of 38,000. You saw hundreds of thousands of people roll off the back end, leave the labor force. You saw a couple 100,000 people be moved from the full-time column to the part-time column, and no one's even talking about that. But if that's you, that's the same as being laid off. I mean, and what it does to slow down the velocity of money, which is what brings about inflation, is it's almost we're almost unable to explain how important that is. So it was a much more negative report than even people are saying it was.
Stephen, there seems to be a rift in opinion on how the economy is doing, when the Fed will raise those rates. What's going on here? I mean, we're all looking at the same data.
Well, you've seen what happened to the dollar over the last few days. It's come in a lot. That's obviously because the Fed is in a position where they cannot raise rates next week. At least we perceive them not being able to raise rates next week. Their banking masters may have a different take on that, but I believe they're going to have to take a pass and talk tough in July. They're going to have to say we're still on track to raise in July, because if July gets past them, then they're done till after the election. Then it's probably nothing in 2016. So they're going to probably have to take a pass, and then they're going to have to talk tough in the press conference about 2016, about July.
Right, and something we can all agree on is weakness in the dollar, which seems to be making a comeback right now. What is this in response to, and what's the effect it will have?
This is probably a little bit of a technical bounce you're seeing today, where it's back up around 94. But let's not forget, 95 is the level that the Fed plays nice in the sandbox with the other central banks. It seems to be, if they haven't agreed upon it, it sure looks like it. So it looks like they pull out the hawks when they get below 95. They pull out the doves when it gets above 95. And I think this today, what you're seeing is partially a technical bounce and partially maybe anticipation of that tough talk that I'm expecting next Wednesday.
All right, well, in with the negative and out with the positive. Stephen, tell us some good news we can look forward to.
You want good news?
Please.
All right, this is going to finish out as a relatively quiet week. The volumes have been low. I mean, I'm sure everyone has noticed. We're going to get retail sales next Tuesday. Retail sales are going to be highly focused upon, not just by us, but by those folks on the FOMC as they prepare what they're going to say on Wednesday. So your plate will be full early next week. Until then, you're going to have to tread water and try to make a few bucks here or there.
All right, well, hopefully that'll put some smiles on some people's faces. Thank you so much. We'll catch up next Thursday.
It's a date.